It's still family in the sense of every conversation because of its dominant role in smart contracts, the ongoing development of layer 2 scaling, staking yields, the fee burn mechanism under EIP 1559, and the simple fact that almost every major on-chain activity still settles through or interacts with Ethereum in some way. If this is useful, hit the like button, subscribe if you haven't already, and leave a comment with your honest take on ETH. I actually read them. Looking at ratings and signals, a lot of the technical scanners and community sentiment have leaned cautious to mixed for an extended period. You will see a mix of hold and mild sell readings, especially from tools that track the longer term trend and the position relative to key moving averages. Funding and open interest in the derivatives markets remain substantial given Ethereum's size, but the short-term outlook from pure chart-based sources stays defensive until price can reclaim and hold above recent resistance levels with convincing volume. There is far more coverage and analysis for Ethereum than for almost any other asset, yet the consensus from technical and sentiment tools has stayed measured rather than strongly bullish. Here's the real debate. Is ETH actually undervalued at these levels, or is this a value trap after years of relative underperformance versus earlier cycle expectations? One side points to the real on-chain activity, the dominant position in DeFi and smart contracts, the staking yield, the fee burn mechanism that can turn ETH deflationary under high usage, the massive developer ecosystem, the layer 2 growth, and the idea that the settlement layer of the crypto economy should command a higher valuation if capital rotates back into infrastructure. They argue that if usage stays strong and layer 2 activity continues to expand, these levels could look reasonable in hindsight. The other side says look at the chart and the market structure. Ethereum has spent long periods lagging Bitcoin and failing to reclaim previous cycle highs with the same force. What's going on with Ethereum right now? The chart has been under pressure for a long stretch. Sell signals keep appearing on the higher time frames, and yet some people still argue this thing is somehow undervalued at these levels. How do those two views even sit together? Let's talk about it. Ethereum is the leading smart contract platform and the second largest cryptocurrency by market capitalization. It powers the majority of decentralized finance, NFTs, stablecoins, and on-chain applications through its virtual machine and extensive developer ecosystem. ETH is the native asset used for gas fees, staking, and as the primary collateral and settlement layer across the broader crypto economy. It currently ranks number 2 with massive daily volume, and the price has been trading near the levels you're seeing after a multi-month decline from previous cycle highs. On the technical side, the bigger picture remains a clear long-term corrective structure from the much higher levels reached in previous cycles. Price has spent extended periods making lower highs and lower lows on the higher time frames, with recent action testing support near multi-month levels. Short-term bounces have occurred but have consistently failed to reverse the larger structure with conviction. Momentum indicators have been mixed to weak on the weekly and daily charts, often hovering in neutral to oversold territory without producing strong sustained recoveries. Moving averages on the higher time frames still lean bearish to neutral, and volume has been relatively subdued outside of occasional spikes. Short term, it feels more like a weak consolidation or bounce inside a larger corrective structure than a clean trend reversal. You can argue there is resilience when price holds key higher time frame support, but the overall structure still looks heavy until proven otherwise. Competition from other layer 1s and the rise of alternative ecosystems have intensified. Fee revenue has been diluted by layer 2s in some periods, and the market has at times treated ETH as a lower priority large cap name despite its fundamental role. That's the classic trap setup. The technology is foundational, the network continues to process enormous activity, but the market keeps assigning it a more restrained valuation while attention stays selective. Retail often gets caught here, buying the Ethereum is the backbone of crypto narrative while the larger trend remains corrective or sideways. Nobody knows which way this resolves. The chart is still fighting the fundamental narrative. The network continues to power the majority of on chain activity, and the market remains selective about which large cap infrastructure stories it rewards. So, the real question is simple. Is this the kind of project that can finally break out of its long corrective phase and re rate higher? Or are we just watching the second largest crypto settle into a prolonged period of relative underperformance while people argue about valuation? Bull case versus bear case is fairly clear. Best case, broader market risk appetite returns, on chain activity and layer 2 usage expand, staking and fee dynamics support the token, and price manages to reclaim key resistance levels and start building a higher base. In that scenario, you could see a meaningful recovery toward previous intermediate and cycle highs over a longer horizon. Worst case is the opposite. Relative performance continues to lag, volume and attention stay selective, and the corrective structure simply grinds lower or sideways toward new cycle lows. In that scenario, the undervalued talk just becomes background noise while price continues to underperform expectations. Short term, the picture still looks more consolidative and reactive than impulsive. You need to see stronger volume and a clean break of the recent resistance cluster before the short term bias flips with any real confidence. Longer term, it comes down to whether Ethereum can convert its dominant smart contract and settlement role into sustained demand and relative outperformance for the ETH token. That's the only path that turns these levels into something more constructive instead of just another extended consolidation or grind lower. Risks are still meaningful. Volatility remains present even at this size. A broader risk of move in crypto, continued rotation into Bitcoin or other narratives, or a slowdown in on chain activity can pressure the price further. Downside remains open if the recent support zone breaks and the corrective structure simply continues. Retail traders love the long term, smart contract platform and settlement layer story and end up holding through multi month or multi year periods of relative underperformance. Liquidity is excellent, but that doesn't eliminate sharp drawdowns. There's also the structural and competitive risk that comes with any dominant platform. Newer chains, better user experiences, or shifts in developer and capital attention can continue to challenge relative performance even while absolute usage remains high.